JBlog 2010, November 14th. Today I'll start out by looking at the XLY, which is the Consumer Discretionary Index, just to look at the amazing run-up that this particular sub-index of the S&P 500 has had over the last 2 months, two and a half months. It's basically been very little in the way of down days. Much of this income is derived from the fact that many of the companies in the sub-index are international. And even though the US consumer is not doing so well, even though that doesn't seem to stop many people from going out and buying things anyways, this index is massively overbought stochastically. And potentially things are weakening. We had this bounce when QE2 was announced, and there's a gap here. Gaps obviously like to be filled. And on Friday, when China announced a potential increase in interest rates, which would take liquidity off the market, we saw a bit of a down day there. Now going into the S&P 500, roughly the same thing. The drop was a bit more dramatic on Friday, and it was done on volume. The S&P 500 is also very overbought. Basically, this is the same chart, and you can see that all of it is always the same chart. Because realistically, none of this has anything to do with the market. Everything has to do with, let me find the chart for you. This particular chart right here, this would be the US dollar. The stock market and all the commodities are basically reacting in reverse to what the US dollar does. The faster the Fed can destroy the US dollar, the higher the market in commodities that are priced in US dollar will obviously go up. Everybody feels that the US dollar is being debased, which of course it is, but I don't think it's being debased quite as quickly as everybody fears. 600 billion might sound like a lot of money, considering that the US government is running a $2 trillion deficit per year. 600 billion really isn't that much. So at that rate, it's going to take a very long time, in my mind, to destroy the US dollar. I think this is overreaction at this point. I believe the market actually expected more out of QE2. People were talking about 1 trillion, potentially even 2 trillion, and that obviously did not happen. So we'll see what happens in regard to that. Now on Friday, there was the announcement by China as well. The commodity exchange announced a higher margin requirements for silver contracts, which kind of gave the market a pause and brought some of these commodities down. Was basically a warning shot to the investor that says don't go crazy, because if this continues very far, we might just increase margins on more than just silver. So oil saw a big drop on Friday. Natural gas had been dropping for a few days, even though I am bullish on natural gas now until at least February. Just because this low dip here I see as a capitulation move, so I'm trading into natural gas as we speak. Gasoline saw a bit of a drop. Gold, of course, saw quite a massive drop on Friday. It's funny, you got this huge run up here, then you get a little drop, and everybody goes, oh my god, is this the end? No, if you look at the trend line is down here. Gold can easily go until 1240 and still be within the trend line. That's not really an issue. Silver also had a big drop. Silver had a huge run up. Hasn't traded around 28 for a very, very long time. Probably quite overvalued. The silver market's very small, so it once it gets attention, it is very easy for it to go very high very fast. If we look at the gold silver ratio, silver has been increasing in price much faster than gold, but of course at 1 to 51, it is still silver is still underpriced in relation to gold the way they come out of the ground at 16 to 1. And also, while all gold is still in existence, most silver has been consumed building electronics and um, in other processes because silver is not valuable enough to be recycled realistically on a large scale, unlike gold. Here's gold in euros, so eliminating the US dollar move. Gold has been bouncing off nicely off this trend line in euros and seems to be roughly priced where it should be. It's a little bit on the expensive side in US dollars, but I believe it's the US dollar that will move rather than gold. Um, US dollar, of course, was quite oversold, in my opinion, too oversold because the main currency it goes up against is the euro. There is really no other choice. You either go into euro, or you go into US dollar. No other currency is big enough to actually contain all the liquidity that is floating around the planet. And the euro isn't really looking so good. The eurozone is still, even though the central countries are relatively solid, um, but there's very few, and the periphery is questionable at best, with Italy, Spain, Ireland, Portugal, and of course Greece. The VIX still does not show. It shows a little bit of fear. Now we had a descending wedge here, and we have broken out of the top of that wedge. Let's say where we go from here, there seems to be still very little fear. Um, Sellers of options are still looking for very little in the way of premium to protect themselves. I think they're foolish, but history will be the one to judge that one. Copper came down a little bit, and going over and looking at the markets themselves, we have the New York Composite right here back down to its trend line, which of course is a steeper trend line. I'm kind of guessing this looks like a bit of a trend line, even though it was violated down here, and we'll see what happens on Monday, whether it bounces off of this trend line or whether this was actually the top for the time being. That would work for me. We'll see. Um, Uraniums continue doing very well, even though they were hit on Friday as well. Let's just look at the main uranium company, which is of course Cameco, on the Toronto Exchange. Also traded in New York, has done very well. This is in Canadian dollars, going from 21 all the way up to 38 since June. That's an amazing run. So there's lots of activity in the uraniums, and here's a company that can probably still double from here just on fundamentals. That's the nice part about trading in a part of the world that is not so heavily controlled by Wall Street. There is less manipulation, and things actually could act more on fundamentals. Going over to the news, um, we have a few stories I found interesting. Mobius is saying that he does not foresee any risk anytime soon. He of course manages 34 billion for Templeton, and that's the general attitude that is out there. There is no risk anywhere now, whether he believes that or whether he just needs more money. He doesn't want people to pull out because, of course, retail investors have been pulling billions out of the market. They don't want to be in this. They want to be in something safe. Two crashes in this decade is just too much. So maybe he is having a rah-rah speech for the troops. We'll see. Or maybe he wants to sell his stuff and he needs a market for it. Either way, He says he doesn't foresee any risk. I do foresee a lot of risk because nobody else foresees risk. So that's usually when things are dangerous. Bernanke is frustrated because the banks are using his money that he gave them and they're buying treasury bills with that rather than lending it to the people. Well, the fact is that the people don't want it. People don't want to borrow money. The businesses don't want to borrow money. So what is he going to do? And what are the banks are going to do? They're going to, of course, borrow that money at 0.5% interest, multiply 10 to 1, and then buy treasuries with it, which gives them, I don't know, 2, 3, 4% return times 10 is 40. It's a nice return. I mean, it's good money when you can find it. 40% return at no risk, really. CEOs are very optimistic. That's very interesting because insider selling of stocks is actually at a record high right now. So they seem to talk optimistic, but their actions are very different from what they're saying in public. Asian carriers have too much capacity, airplane wise, and now they want to dig into other markets. That is also quite interesting. Um, this is also interesting. The in on a deficit cutting attempt, thinking of getting rid of the tax deductibility of the interest portion of a mortgage in the US. That would, of course, be a disaster for real estate in general if you could no longer write off your mortgage as part of your income taxes. Big disaster. Um, this one. Of course, there's the ongoing battle between Obama and China, well, between the US and China about whether the Chinese currency is too low or not too low. That's not going to go anywhere because, of course, China is the biggest creditor to the United States. So there's only so much that can be done there. Um, Germany feels and France also feels that some of the pain of the bailouts should be carried by the people buying the bonds of the places that are now defaulting on their bonds. And why shouldn't they? I mean, you should be more careful who you lend money to, really, because when you're buying a bond, you're lending money to somebody, and you cannot just expect somebody else to bail you out all the time. You have to be careful, and swaps don't do the trick, obviously. Um, Here's a story on Portugal and Ireland. Bonds are dropping because there's now once again talk that these bonds will not be bailed out. Same thing again. This is the part about the commodity exchanges raising margin requirements. Talking about coffee and sugar here. They also did it with silver. That, of course, spooks the commodities market a little bit. And let's see, what else do we have? A few other stories that I found interesting. Let's ignore this one, I'm running out of time here. But Ireland, of course, is in big trouble. Next thing that to fail in Ireland probably are the private mortgages. It's not as easy in Ireland to walk away from a mortgage. The things that the creditors can come after are a lot more than they are in the United States. Uh, this one here I love. The deficit panel pushes cuts, and you scroll down in this article and talks about that one of their plans is actually to raise the retirement age somewhere in 2050 to 68. So once again, one of those wonderful examples of where the current problems are pushed out and the next generation will have to deal with it along with everything else. Great, good idea, love it. Not. Um, so yeah, that seems to be the way it is. We created a mess, but we don't want to solve it. We'll let our children solve it. So good luck. Anyways, that's all I have for today. Good luck trading next week and all the best.